Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Wednesday, December 12th, 2012. That would be 12/12/12. All right, let's take a look and see what happened with the E-mini futures, the ES. You can see that Monday was a fairly quiet, very boring day, right up to the 1421 line in the sand, my line in the sand. Okay, today it just like started on a tear. It started overnight, and it continued all the way through the most of the day. I think we were up like 11 or 12 S&P points, right up to these highs on November 2nd and November 7th. So the big picture is this was the neckline that was formed back in August, and this was the Bendragi crown that I call it. Left shoulder, crown, right shoulder, came right up to the neckline, and we poked through it. That is not a good sign for shorts, because it looks like this wants to just creep up a little bit higher, even though T1, 2, 3, and 4 are below zero, and T5 is just skimming on the bottom. We could see a little more upside action here. I don't know what the FOMC meeting is going to be like tomorrow, or what's going to come out of Bernanke, but it could be pretty volatile. If not only for the fact that that everyone is kind of waiting to see what's coming out of Washington with the fiscal cliff talks and everything. Sorry, I had to pause that for a minute. Whatever's coming out of Washington with the fiscal cliff, Alan Greenspan gave an interview with Maria Bartiromo after the market closed on CNBC, and he said no matter what, if we go over the fiscal cliff, we would definitely have a recession. And even if we don't go over the fiscal cliff and there is a resolution, that the business environment lacks confidence in building things that are older than that look forward 20 years. So that's not really good for the economy. That's on fundamental basis. On a excuse me. On a technical basis, we have broken through here, and the shorts are on the run no matter what's coming out of Washington. And this may just happen all the way up to 1450. So I actually got stopped out of my positions today, and that's trading. I mean, they were short, and I'll show you them in a moment. Okay, so for you day traders on T2, this is the hash mark for the beginning of the day. T2 hit at 1431, 1432. It went down below zero. Down below, up above, and down below. That's a classic sell sign. And it took it down to 377, bounced up, and then got confirmed by T1 to the upside. You could have ridden that into the close from 2:55 Central Time into the close. It's good for about 5 points. Let's look at Goldman Sachs. All right, Goldman Sachs on the left-hand chart here on the daily. It did spike up. It looked like it was going to continue down. I still like this on the downside, except that I had options that expire next Friday, so I didn't want to take a chance on them. I rolled out of them. Well, I got stopped out of them. So, but I still do like it on the downside. The 8 has not crossed has not crossed back above the 21, and it may have another lift here to 2182. That's not going to change these. That's not going to change T2 on the daily. However, on the short term, it has changed. So you have to wait. If you want a position to match up with T1 and T2, you have to wait for the 21 period moving average to cross back over on any of these time lengths. T1, T2, T3, 4, or 5. Let's look at, and the same thing if you're following on the ABC waves, the same thing. It's actually already, okay, that was like a misfire there. I believe that was a misfire. Hang on. Okay, that's a misfire on E signal. It should be back up here. So that last candle doesn't hold. Okay, Apple was up as high as 150. Let me see here. 149.56 before it finished. It finished like 8 points off the high, but it was still up 11 points. So at one point it was up 18 points. Let me see. In the old days, you know, like when Apple was like running up like this, it would never finish near the middle of the low or the low of the day. It would finish on its high with the market up. So I still like Apple to the downside. It's just that and because the 8 and the 21 exponential moving average crossed, and they're both below the 233. To me, Apple is still a short. It's even more of a short if it gets up to 560. But I think you can leg in here. Forget about December puts. You have to go out to January with a 70.7 delta. So, and you can see here it moved up. It started moving up during the quiet period on the 21 cash price on T1 and T2 on that very quiet Monday, and then just took off like a rocket the next day. So possible 560, good short on Apple there if it gets there. All right, if you recall, for a while I liked Amazon on the upside, and then it started turning. It started kind of doing this fidget thing sideways, and then it broke a trend line that was up here about 7 or 8 days long. It went sideways, and then on the 21, the 21 cash price, T4 came below 0, and my target for that was the 377, which was actually like 244. So in the next day and a half, it actually hit 246. So close enough for government work. It bounced off of that, and if we look at, let me see, at the 610 here, it actually did hit the 377 on the 610, which was a little bit higher price. Came back around, is looking at it again with T4 on the tick chart. So these are short-term vehicles going below 0. Even, well, this is days ago. So it's still, I like this to the downside. Let's look at the 21 again here. Okay, so this curved around. This is part of T1 is below 0, T2, T3, T4 is all below 0. And even with this move of 292 to the upside, it was actually up almost $5.50 before it started coming down. On the daily, this is still no matter what it did today, it was a lower low and a lower high. So I like this to curve around back down and start heading down on Amazon. So just pick your spots. The immediate target is 240, is 245, but I think it could go a lot lower. Let me see if I can find a target here. Well, let's just do this. Let's take a fib tool here. And okay, 237 to 232 would be a target for that. I did actually get into these on the short side after it ran up. So, but not December calls, January call. I mean January puts. All right, lastly, Google has been going sideways. It goes down 10 points, 15 points, up 11 points. It was up 11 today, and even higher than that. Let me see. It was up another 5 or 6 points before the market sold off in the afternoon. This is a minor sell-off, but the 21 is the T1, 2, 3, 4. They're all above zero, but they're marginally above zero. So I don't have an opinion on that right now, except for the fact that T1, 2, and 3 are below zero, and those are the tradable waves on on the um, on the daily. And if we do a fib tool here, it's already hit. It's right. Whoops. Hang on 1 second. Okay, if we do a fib tool here, it's already hit the 50% mark, and none of these, the first three waves have not gone above zero. So since we hit the 50% mark, if you look at the left-hand chart, this hash mark is the same as this candle right here. We went down. It immediately went down below zero, came down to 377, and then popped back up. I think this is going to be short-lived. I'm not going to make a call on it yet until T1 goes below zero on the 21-minute cash. If you're looking at the ABC waves, same thing. One of these has to go below zero before there's any call to the downside. And then once that happens, it could come immediately down to 684. So let's take one more look at the S&Ps. And we are down 75, which is like a drop in the bucket. I was really surprised that everybody is letting themselves get caught in this short position to go beyond this line in the sand, because there really is nothing. Fundamentally, I don't like this. Technically, it looks like it still could squeeze a little bit more up to the high side. But once that high happens, we could just roll over very, very hard into the end of the year or January. And actually, my other line in the sand, if you're interested in a longer-term view, is 1267, which is quite a ways from here. It's like 160 160 S&P points or 1,500 Dow points. So I think it's very possible this market is waiting for some good news, but they're not selling because they think it's just going to go up. This is not your grandfather's trading. This is not your grandfather's sit and accumulate for the rest of your life. This is a trading market, and you should make your profits and make a trade, get out, and just play with the market. But you're gonna if you think it's a grandfather's market, then your 401k is definitely going to turn into a 201k. Just as a reminder, triple witching is coming up a week from Friday, and the S&Ps are changing out on Thursday evening for Friday morning. So if your scales are whacked, there's going to be like a $2 or $3 difference, 2 or 3 point difference in the S&P. So don't be alarmed. It's not your computer. It's the exchange doing their exchange. Have a good evening, and good luck on 12-12-12. It will never repeat in our lifetime, unless you're lucky enough to live till 12-12-21-12, but good luck with that one. Have a good evening. Good luck trading. Take care.